Hello again, thanks for joining me. This is a chart of the US dollar index futures weekly. It's such an important chart. I mention it quite a bit when I do my market wrap-ups on the weekend, but I just thought I would spend a little bit of time showing you just how significant the US dollar is compared to other charts. In particular, it's those who are priced in US dollars or who are directly related to the US dollar in some way. For those who aren't aware, the US dollar index is a measure of the value of the US dollar relative to a basket of 6 currencies considered to be the US's most significant trading partners. It was established in 1973, and some people think that those basket of 6 currencies should be changed slightly to include China at least, which it doesn't currently. Anyway, you can see that in the last week, the US dollar index has turned down when it had been looking quite strong all the way since this bar on an increase in volume. There was always a suggestion that some buying had come in, or significant buying had come in, and price was looking like it might break out here, but it came back and consolidated for a period, pushed back up to the highs of the range here. But this week was the US federal election, and it's turned down in response. Now we'll have to see whether this is confirmed in the coming weeks. At the moment, it's still uncertain. But you can see that price closed right at last gasp support, and it actually closed. The close was lower than any previous close during this period here. So it's certainly looking vulnerable. Volume was above average, but it wasn't excessive, which suggests it actually was serious selling and it wasn't some sort of engineered shakeout by the market. If that was really, really high volume, I'd be questioning it, but it's only a fraction above the average, and it's a very wide spread, perhaps the widest spread all the way through, maybe as wide as that one. But still, it certainly looks like the market may have had a change in sentiment. And I thought that it might be worth just looking through some of the other charts, showing you how significant the US dollar is. The first chart we'll look at is the Australian dollar. It's obviously directly related because it's the Australian dollar versus the US dollar. If we make a comparison, you can see clearly how one is the inverse of the other. In this chart, the Australian dollar is coloured and the US dollar index is greyed out. And you can see all the way through from one end of the chart to the other. If one rises, the other falls. It trades the inverse of each other. There are some slight differences. You can see here the US dollar index came down very sharply and the Australian dollar didn't make quite as much ground in response, but there are only minor differences. The one trades inverse to the other almost exactly all the way. So if we remove that chart and then perhaps look at the E-mini S&P 500, the equities in America, and you can see clearly that the US equities trade inverse to the US dollar index. And you can see now in the last week how during the US election week, price came off on the US dollar index and it increased considerably right up near the highs of the range in US equities. And you look at gold, it's a very similar story. Gold priced in US dollars. And trades the inverse You can see how one is at times slightly stronger or weaker than the other, but overall they definitely trade the inverse of each other. Now copper has been showing some underlying strength. So you can see it's a little bit stronger. You can see through this period here, this looks a bit like bullish absorption with bars that threaten that the market is going to move lower, like these two, but both times in response, the market actually trades higher. This looks like bullish absorption. This is what a market with a positive influence does and how it trades. You can also see a little bit of clustering of closes, like these two here and these two here. It's another sign of bullish absorption where the market is showing signs that it does have an underlying positive influence. Now the US 10-year note would normally trade inverse as well, but you can see that it's been trading sideways for a long time. So there's underlying factors in this market that are affecting its inverse trading with the US dollar. You'll be able to see that it is trading inverse to some minor extent, but nowhere near as much as some of those other charts. This should be trading way higher, considering how much lower the US dollar has come off. This should be trading way up here somewhere, but it's generally been trading sideways since April with only some minor changes in value. And it seems like right here was when the weakness came in. This was price coming off with a fairly wide spread. At the same time, the US dollar lost ground. At that time, the 10-year note should have gone higher, but it didn't. And from there, prices traded pretty much sideways ever since, just with some minor movement. I think you'll find even Bitcoin trades partially inverse to the US dollar index. It's not perfect, but you can see here they both came off together at the same time. They both made ground at the same time, so it's not a perfect relationship, but it's pretty obvious when the US dollar lost ground here, it made ground up here. They traded inverse to each other again here, and they're currently trading inverse. You can see the US dollar index lost ground this week and accelerated higher on the Bitcoin chart. So this is not directly correlated, but it's reasonably close. You can see that it still actually affects this chart to some extent. The light crude chart would normally trade inverse. It's priced in US dollars, but there's been quite a bit of weakness in the light crude market, partly, or at least to some extent, it was due to the coronavirus issues. Even though there was quite a bit of strength in the background seen here, this was buying for sure, little doubt. There was buying in here, and that buying carried price up higher, but ever since price reached this level, it really hasn't traded as strong as it might have otherwise. You would have expected in a reasonable market that crude would be up somewhere around here if it was trading the exact inverse as it would normally. but you can see that there's factors affecting crude oil price at the moment, and that's made this market a bit soft. So the underlying fundamentals of the market are playing out, and it's keeping the light crude market at a lower price than it might be otherwise. So you can clearly see the significance that the US dollar plays in the markets. When the US dollar is moving, things happen in many other markets. Now you need to keep an eye over the next week or two and just see if this week's downturn on an increase in volume actually becomes confirmed in the end. And if it is and price continues lower, then you can expect some of the other markets to respond higher, especially those who are priced in US dollars. Okay, that's my lot for the week. Just a quick one, showing you the significance of the US dollar and the US dollar index chart. Thanks very much. See ya.